Hello people. Right, I've been watching a few pairs today and making a few trades, and I just thought I'd bring this to your attention. Monthly chart. We've just broken through this low here, so I don't often mess around with GA. The pip value is quite low, but there again it's made up by the moves. Instead of going for 5 pips, you go for 10, and it's not so bad. This is worth about £5 something a pip, whereas something like Aussie, Swiss or whatnot, it's worth about £8.20 a pip or something. So 10 pips, it's a big difference. Anyway, look what's going on here. We've just confirmed down. High, low, lower, high, lower, low, lower, high, lower, low, or rather we've just broken down. We've still got the whole month to go yet, so this will be interesting. So it's not a monthly confirmation down until we get to June, and I don't really want to wish my life away, so I wish I hadn't even mentioned that now. Anyway, what else is going on? We've got this ascending trend line here. We've got monthly support below us as well. We've got the most recent resistance level broken here, so I would expect that to be tested at some stage. But as I always say, remember, price does not go in a straight line, and also the disclaimer, do not trade what I talk about on here. Trade your own analysis. That's the whole point of this my channel, as it were. Teach you to trade as opposed to sit you in a room with a bunch of other traders and try and work out what the hell's going on. So that ascending trend line has been broken on the weekly. The weekly reversal was at this point here. Low, high, high, low, high, high. And then we sing the song until we get a break and close. That was the reversal, and look what happened. We had the pullback. Now, I haven't actually done this analysis before, so I haven't got a clue what I'm looking at, but there's the break of that support level there, weekly level. We got the close, and then we got that massive pullback, and that pullback was worth 255 pips or thereabouts. In fact, the actual pullback went further, didn't it? So about there, 270 pips, give or take. Now, these breaks of support are massive, and this is why I love highs and lows of candles and the actual accuracy they allow you, the precision they allow you to trade by. So and while we're here, another thing that occurred to me while I was out rushing around after horses is that this is not the Holy Grail. My 3 candle reversal, it's nothing like it. It's just an additional tool that other people don't really talk about. Very rarely do you come across a trader talking about a break and a close through a level and then a reversal. But it happens. Look, we've got a massive level here. So what might happen when this weekly inverse hammer, I suppose you call that, or no, actually it's a hammer, but it's just been it's gone the opposite way. So it is a hammer candle at some sort of support that hadn't broken the low, that green one I'm talking about there. But what might happen when this potentially breaks today? Or yeah, we're Thursday today, aren't we? So Friday rather. But regardless, there'll be other levels below in the lower time frames that will potentially give us an indication of where the price will go anyway. But this was the break, this was the pullback, and then look what happened, a continuation. Okay, that's 3 or 2.5, 2 3/4 weeks away. But you know, if I'd been studying this chart, then that would have been my sort of plan, my trading plan. Anyway, not an awful lot more you can look at on there. I mean, you can start making a spaghetti junction of levels and lines on here, and you can go on forever, can't you? But having said that, look at this big gap here. Once this level was broken below, that is a weekly low there, then price has just crashed. I'm going to put a low on that one anyway. I'm talking about this gap here. Once this low here was broken, monthly low by price here, that's a massive old gap. I'm just thinking out loud, guys. There is not an enormous point to this video apart from how once price is broken, things like this happen, and you know, once this price is broken, what might happen, and how we trade it profitably. In this instance here, we'll talk about that actually. So that's the continuation, that's the break, that's the pullback, that's the continuation. So go on to the daily, and all we really had to wait was for the close below. You could attack that close below because you know you've already had a telegraph message saying yes, the intention is down, wait for the pullback, and then you can hit it. So you get weeks and weeks to think about, or days at least, to think about what's going to go on. And you can trade it both ways. We could have attacked that high there, high, low, lower, high, lower, low. We could have avoided getting in early because we know we have to wait for a pullback. So if we put a high on that red candle there, and remember, you're not doing this with hindsight glasses on, you're doing it with a knowledge of how price acts, time and time and time again. Once again, that is why I have my 3 candle reversals, because it gives structure to my trading. It's not confusing at all, it's not mumbo jumbo, it's just pure. As these candles form, you can put your high on there and think, well, is it going to reverse up there? And once the low breaks, you can delete that high and you can put a new one here. And you can do that right down to the 5-minute and 1-minute charts. So you're building a roadmap to trade. And that's all I do all day long. So getting back to this potential short, we've confirmed up now, so we actually have to confirm down. So that's the low there, that green low there, that price closed there. Now this is the point I talk about where exhaustion starts to come into the market. You know, we closed below that low there. But sorry, I digress. Let's have a look at how we could have attacked this potential long trade here. So this daily high, the yellow here, because we're at this point here, not with the candle close. In fact, you could say we're at this point here. And we have that daily high in place there. So all we've got to wait for to attack that daily high, and ultimately that old support potentially acting as new resistance, which I talked about, that 200 and whatever it was, 70 pip move. $330, yeah, so it's 270 from the open. So you know, when this reverses on the 4 hour, then we watch the pullbacks on the 1 minute. So that's the reversal on the 4 hour there. High, low, lower, high, lower, low. Low, high, high, low, high, high. And that's our target. And then ultimately, when it breaks that high, we know it's potentially on the way to that target, the old support. So that is what I call a trading plan. And you've even got, you know, your swings. Swing 1, swing 2, swing 3, pull back, and swing 3 has to break your target resistance. So if you had 5 swings here, it doesn't matter. You call swing 3 and then your accumulation. Hopefully that makes a bit of sense. Whatever, it can go up, down and sideways here. Once it's broken, then we expect the pullback. We can call that, for argument's sake, swing 4, and then swing 5 is the continuation. And we would wait for the pullback. We've had the pullback there after the close. That's the pullback. You do everything. We're on an H4, remember, so you can go down to your H1, M30, M15 and so on and so forth, and judge your timing for the continuations. Okay, this video is a bit too long now, so I'm going to get out, but this move down was my trades, 2 trades for today. Where are they? Hang on. One, and then we had a pullback, so I re-entered. 2 again, and we had an H4. I like the look of the trade. I was getting in because of the break through the pivot there, the reversal, high, low, low, high, high, low, high, high, and an outside bar reversal on that. So I didn't want to get involved in a trade at this point, but the minute we'd broken through, and clearly broken through that pivot point there, and there was a target of an H4 or something below me. Let's just draw a few levels in quickly before this video gets too long. So you can see why the pivot points come in handy. That's an H4. Oh, that is the H4 low that was my target there. Notice that clear gap, massive gap. And I'd check the H1. Yeah, we want to be on that candle. Sorry. Drop down and you check what's in the way of that gap. Remember, I'm always trading gaps. It is a mantra for a reason. So here's your H1s, that's your H4, that's your H4 low. Back over. And there's your H1 there, and we've broken the H1, so it was clear air between that H1 low and that H4 gap. You know, this is not coincidence, guys, that I do this time and time and time again. The histo alert was involved in the price action as well. We'd broken the 20 level on the 30 minute chart in the bar before my entry after a pullback. You know, all of these things come into your trading decisions, guys. We were overextended, but we still had S3 to go for, and look at what price has done. It's hit that S3. So as long as you get as many ducks in a row as you possibly can for trading, then you are good go. So one was 13 pips, I think, and the other one was 15 or 16 pips. In fact, I can have a look. 73 to 56, whatever that is. 56, 66, 17 pips. So yeah, about what I said, 13 and 17. So that's it, guys. You know, wait patiently for the trades, do your levels and lines, do your analysis, and then take the trades. So gold's been good to the long side as well, but I might explain that in a different chart, different video. Thanks for watching. Have a great day.